Hello and welcome to the closing keynote of the Building Empires event. So much planning and it's gone so quickly, but
It's flown by.
Honestly, it's been great, and I think it's gone better than we kind of hoped. We had a great time over the last 3 days. I personally love talking about this stuff, and it just gave us an excuse to talk more about this stuff. So, how about you, Adam? How you found it?
It's been awesome. And the live panels at the end of every day have been great. Like, they give everyone a chance then to come and ask questions to people they've listened to the talks through every day. It's just, it's been awesome. It's been great.
Yeah. I'm already looking forward to the next one. But yeah, you're right. Yes. The panels have been awesome. Just so much insight and so much experience there on the panels that it's great to.
I can't believe we managed to get all those great people to come and do our first event. It's kind of crazy when you think about it. It's like everyone that's big in the space.
I know, it's awesome. We've got to keep it up for the next one now, eh?
Can we top this? I don't know.
Yeah, we can top it. We're gonna make it bigger and better next time. More stuff, more sessions, more types of sessions. So yeah, looking forward to it. But wow, yeah, we're at the end, but it's not quite over yet, because you're finishing off with a forward-looking talk on where we expect the industry to go over the next few years. So I'm not going to spoil it for you. I'm going to let you introduce it and talk about it, because you put it together. So far away, Adam.
Awesome. Before we jump into that, I just want to say thanks to the team again as well, like the team at Niche Website Builders. Like, me and Mark are the face. Obviously, you see us on the podcast and you see us on these kinds of things, but behind us is just a great team. We've got a great team within the business, but especially the marketing team. They've been instrumental in pulling this event together and organizing it and setting everything up and editing the videos and all kinds of stuff. So yeah, just from me and Mark, we just want to say thanks to everyone at the Niche Website Builder team for helping us with this event and doing lots of the work as well. It's really appreciated.
Absolutely. Yeah.
Yeah, awesome. So as Mark mentioned, I'm going to do the closing talk. Mark did the opening keynote talk, and talked a lot about the industry and the space. And over the last 3 days, you've kind of heard a lot about the space and how to grow websites and how to buy them and things like that. I'm going to come at it today from a slightly different angle, in that, where do I think the space is going? Do I think it's sustainable the way it is? Do I think valuations of websites are going to keep going up? Like, how do I think we're going to move past like the current model of just content sites on their own? And as I go through this, I'd love any questions that people have, like, to ask them in the chat, and I'll answer them as I go. But lots of this, a couple of things I'll say in here, just my own personal opinion, just based on stuff that I think is my own opinion and my own vision of where I think the space is going. This is not to say that this is exactly what's going to happen or anything like that. And I'd love to hear everyone else's view as well in the chat. So feel free to pop that in there as we go through. So, the closing keynote, future of the industry. So this is the agenda. I'm going to talk about 3 kind of main topics today. And the first one is the state of the industry. And a little shout out to Empire Flippers. I used quite a bit of their state of the industry data in this one to help me inform part of that section. And I'm going to talk about the bigger picture, like how I think content publishing is evolving in the space, and talk a little bit about kind of FBA aggregators and how they're leading the way. And I think there's going to be an explosion in content publishing aggregators as well over the next couple of years. And then talk a little bit about mainstream investment and basically how I believe the space is becoming more legitimized as an investment asset, like an investment class, and how basically anyone can get involved in the space, whether you want to do that hands-on or whether you want to do that from arm's length as well. So to kick this off, I pulled together some data, which basically on the right-hand side shows 3 different types of sites. We've got Amazon associate sites, display advertising, and affiliate. Empire Flippers sell all kinds of other sites. They sell SaaS and they sell Amazon businesses and things like that. But realistically, in the space that we're in directly, these are really the 3 type of websites that people kind of create in our direct space. And the only data I've got up until is 2020, which is a little bit of a shame that it's not 2021, but I believe they push out their next state of the industry report for 2021 in 2022, and it's not out yet. So this is the most up-to-date data we've got. And in here, we can see that the multiples have gone up massively. Amazon associate sites in 2017, on average, were selling for 26 times their monthly revenue. And in 2022, that jumped up to 40x. And display ad sites have gone from 23 to 34, and affiliates from 23 to 36. And not just that, website investing has clearly become more popular. Look at the sales volume on the bottom graph as well. In Amazon Associates websites in 2017, Empire Flipper sold $3 million worth of those sites. And in 2020, just 2 years later, more than doubled, almost tripled to just under 9 million. Same for display advertising revenue. Those sites have gone up hundreds of percent, from almost $200,000 to 3.3 million, and same for affiliates. So, like, this is not my opinion. Website valuations are increasing, and that's a fact. And website investing is really more popular now than it was a couple of years back, and that's a fact. And literally in just 4 years, multiples have gone up on average 53%. And this is, sorry, man, go.
I was going to say, this is old data, right? As well, like, so like, it's 2020.
Yeah.
Like, it's even the multiples are even higher now, especially display advertising seems pretty low there.
Yeah, I think at the more, like, comfortably we can say it's going to be closer to 40x for display advertising sites right now. So yeah, this is on the low end, and this is just based up until 2020 really. But what I wanted to look at is, like, how does that compare to other investments over the same period of time? If you were to put your money into a website in 2017 and hold it till 2020, like, how does that look if you literally did nothing and just held it, and multiples increased by 53%? So if we look at the stock market, and I basically pulled out start years 2017 and the end years 2022, so the same time period, and I looked at the investment index, which is the Dow Jones Industrial Average, which is basically a representation of the US stock market. Over those 4 years, you would have put $10,000 in, and you would have got 12,328 back at the end. So you would have made just over $2,300, a 23% ROI, which by most, in lots of terms, that's a decent ROI. 23% is great. But if we look at buy-to-let property, I pulled out some data, and according to Global Property Guide, the average gross rental yield is 3.6% in the US. And what I mean by gross is if you literally put all of the cash down. So in the bottom example, the purchase price is $1 million. If you put $1 million into it and then just rented it out, on average, the return is 3.6%. But we know people don't do that. They don't put all of the money down to buy a house. They'll get a mortgage. So assuming a down payment of 25%, purchase price is $1 million, you put a quarter of that down, so you put 250,000 down. Monthly rental income is 1,500. Your yearly rental income would be 18,000. And over that same period of time, those 2017 to 2020, your rental income would have been 72,000, which is an ROI of 28%. So very similar to the stock market. But when we compare them, literally just buying and holding a website and assuming that no upward or downward movement, you would have literally made double the amount of money than if you put your money in the stock market, or if you put that money into a buy-to-let property. And that's literally doing nothing. Assuming that it doesn't go up or down, you literally just buy a website, multiples have increased over the years, and now the asset is worth more. It's appreciated without any revenue increase or anything like that. So just based on that alone, and we'll dive a little bit further in a sec, but just based on that alone, I personally don't believe there's any better asset class out there than investing in websites. And we've talked about this on our streams quite a lot. Like, a lot of my own personal net worth is tied up in websites purely for this reason. Like, I feel like there's literally no better place for me at the moment to put most of my money. But I think this 53% is also quite conservative. Well, very conservative. It just assumes that there's no revenue growth. So imagine adding value to the website, or even if you built one from scratch, like what kind of ROIs you could see. And I'm going to show you now a case study. We've probably seen this case study before. I'll just caveat this one and say this was over a 12-month period, and it's probably one of our best case studies. Like, these results are not typical, but it just goes to show that some of the results that you can see in this space. So it's a client website. It's not one of our own. I wish it was one of our own. But it's a client website, and was built initially on a strong age domain. And then we found 6 additional age domains over the course of the 12 months that we redirected into it. And over that course of that period as well, we created just over 900 pieces of content, which was roughly about 2.1 million words of content. And this is the timeline on what that looked like. So you could just get an idea of the work and the effort that went into this site to make it a success. So the site launched in December 2020 with literally launched with 150,000 words. There was no content added in January, and very quickly we could see that this domain started to take off. This website was going places really quick, and the client could see that as well, and they got on board. And in February, we added another 150,000, and in March, 200,000, and we had a break in April. And by the time May came around, like, the website was only a couple of months old then, but the website was generating almost enough money to be self-sufficient to add 200,000 words of content every month going forward. Like, the client really wasn't putting in any new money at this point. And that allowed us then to be really aggressive. And you can see there that we basically added or continued to add 200,000 words of content every month then all the way through until December 2021. So it was a very aggressive strategy in terms of content creation. And also it's very aggressive in terms of the domains that we acquired and redirected in. So over the course of the first kind of 7 months, we acquired 6 other really strong referring domains. And you can see, there's a DR39 and a DR48 and another 48 and a 25 and a 39 and 31. And these were redirected in to really power up that site and give it authority. It basically became an authority in the space over the course of that 12 months, which is really quick. But just goes to show the power of this strategy of good keyword research, pumping out lots and lots of good quality content, and then finding good, high quality, relevant expired domains and redirecting them into the site. And the results speak for themselves. So the client spent 17,500 on the original domain. The 6 additional domains come to 18,000, and then the content spend was about 150,000. So the total spend was 180,000, which sounds like a lot, and it is a lot of money, obviously. But then by the 12th month, the site was making $40,000 a month in revenue. And I use a 34x multiple here just because that's what Empire Flippers say in their state of report, the state of the industry report based on 2020. But really, we know it's higher than that. We know it's probably 40x, which means this site is worth anything from $1.3 to $1.6 million. So the ROI on that is massive, like 633%. And that's excluding any monthly income that site made. It's literally just the asset value. And when you compare that to property or stock the stock market over the same time, like, there's just no comparison. You just can't get a better, in my opinion, a better return on your money than that. And then this one is one of Mark's own personal websites, which over the same kind of time period, 13 months, the site grew from 0 to 400,000 page views. So not on the same kind of spectrum, but the ROI you'll see in a second is very comparable. So a little bit about Mark's project. It was launched in December 2020. Again, it was launched on an age domain, and the domain was actually a failed Kickstarter project. And in being a failed Kickstarter project, it had some really good authority links from Huffington Post, Yahoo, Inc., Crunchbase, Bustle, like links that you probably couldn't buy really, or it would take you a very long time, or they would be very, very hard to acquire. And there was 414,000 words of content, about 276 posts. And all of the content is informational and it's monetized just through Ezoic ads, which basically means Mark's leaving money on the table there. So you'll see the ROI in a second is still crazy good, but there's money being left on the table there because there's other monetization options that are open to this niche and to this website. You could sell products, there's consultancy and advice, training courses. There's a ton of other ways that you could add value and increase the revenue for this website. But even just doing almost the bare minimum of just putting display ads on there, when we look at the results, like the headline number is 527% ROI. So the domain was a lot cheaper, 2,500. Mark also purchased another website to redirect into this one, which was $1,500. And then content through our team was 31,000. So the total spend on the site has been 36,000. Since owning the site, it's earned 28,000 in revenue from Ezoic. So like I say, just the bare minimum of putting display ads on there. And then if we look at the valuation, March earnings data was just shy of $5,000. And again, going off that 34x multiple, which we know is probably higher, the asset value is 160, almost 165,000, which means that the ROI is very comparable to that other case study. even though the numbers are smaller, it's not worth 1.3 or 1.6 million, it's worth 160,000. The ROI percentage number in terms of actual real gain is very comparable. And again, still incredibly high compared to pretty much any other type of asset. Like there's, aside from like the moonshot cryptocurrencies or the moonshot stocks and shares where you invest in an individual name and it just goes to the moon, like there's not a ton of other stuff out there where you can put money and within the space of, you know, in this case, a year, but realistically over the space of 2-3 years, get these kinds of returns. Which again is why I'm very bullish, so bullish on this, on the space, and so bullish on just content publishing in general, because I think it's only going in one direction, and that's up. And yeah. So based on that, my bold prediction is like website valuations are going to keep increasing. Even just based on the average return for stocks and property, I think website valuations could go from where they currently are, kind of like 35, 40x. They could literally double and still be comparable to just holding stock and doing buy-to-let properties. I don't think they'll ever will double. I don't think we'll ever see a place where there'll be like an 80x multiple on a website, because there's different risks. There's more, I think, inherent risks with a website than there is with property, for example. You know, we've just all gone through a Google update. Some sites are winners and some sites are losers. So there's definitely more risk involved. So I don't think it's going to quite double, but I definitely think there's room for this to continue going up from here. And I think in the next couple of years, we could definitely see 50, 55, even up as high as 60x in terms of website valuations and multiples, which gives us a unique opportunity right now. If you just look at those numbers going back 4 years ago, if you just bought a website and did nothing with it, like you could have made a ton of money. And I think that's still the case now. It's not too late to get in. It's not too late to buy a website or to build a website now and hold it for another couple of years and just see that asset appreciate in value, just because multiples have gone up and people are valuing these websites more, and there's more money coming into the space. So that's my prediction. I guess we'll revisit it in the upcoming future events to see, like, was I right? Is it going in the right direction or not? But yeah, it'd be interesting to see if anybody else in here agrees with me. Like, pop in the chat if you think website valuations are going to keep going up. Do you think they've peaked out? Will they go down? Can they go up? Is this sustainable? Like, just, yeah, get involved and let me know what you think on the chat. So the next thing I'm going to talk a little bit about is the bigger picture. And so to kind of set the scene there, I think, of like the current state and where we're going to go as like individual publishers. But the next part is more about the bigger picture and how I think content publishing is evolving based on another business model that's kind of just run rampant throughout the industry. And that business model is Amazon FBA aggregators. And this is probably a term that's lots of you maybe even not familiar with. I know when I spoke to Mark about this, you kind of heard of the term, but you didn't really know what that meant. And I didn't for a long time. I heard that there was a lot of money coming into the space for Amazon FBA aggregators. And what is that? What are they doing? And basically, the Amazon marketplace is really fragmented. Like there's 35,000 FBA businesses. And Amazon FBA is a fulfilled by Amazon business. So basically, someone owns a product, they send it into the Amazon warehouse, Amazon stock it, and then when someone buys it, Amazon does the whole fulfillment. They package it, they send it to someone, they handle returns, etc. So as an FBA business, all you have to do is source the product, send it into Amazon, optimize your listing, and hopefully get sales and drive revenue that way. Now, of those tons of, like, there's $300 million worth of sales through FBA sellers on Amazon every year, and of those 300 billion, 35,000 Amazon FBA businesses do more than 1 million in revenue every year. So it's really fragmented, but those 35,000 businesses are massive, like in terms of revenue. But typically they run by small teams. You can think of them like content sites. They run by basically like typically 1 or 2 man bands typically, and you know, they may do things well, but there's other things that they're missing out. They don't have infrastructure behind them. They don't have support behind them. So going back to only two and a half years ago, a lot of venture capital money came into the space and into what was the term FBA aggregators. And they started buying up these small businesses, these these $1 million revenue sellers. And what they would do, they would buy them up in related spaces, and they would utilize economies of scale. They put in place a professional marketing team. They'd optimize the listings. They'd make sure that everything they basically have a roadmap to make the product the best it could be in the space. And they would do this, and they would aggregate all of these different brands together. Maybe they would make them into one big brand. And in essence, they were just optimizing. They were buying these businesses, optimizing them towards their own specific kind of SOPs and standard operating procedures. And in doing so, typically they would increase the value of these. And it's almost like a roll-up. They buy them all, they try and increase the value of them, and then they've got a business which is kind of worth more. And that was that's the whole marketplace of FBA aggregators. And you can see here in January 2020, there was literally no money available for this kind of business model. Fast forward a year and a half, there's like $8 billion worth of capital raised by Amazon acquirers who literally go out and hoover up these brands and optimize them and turn them into bigger businesses. And one of the biggest one is Therasis. And you can see here, this is exactly what they did. So they bought a business in November 2018 and scaled it from 2.1 million to 21 million in sales. And then they did another one from 3.9 million to 5.7 million. And the money they've raised is huge. Like, they've raised 3.4 billion to go out and buy these small Amazon FBA sellers and turn them into bigger brands, essentially, and optimize them, with the whole aim of going public. And the capital raise is 3.4 billion, and the latest valuation is 5 to 10 billion. So that's the whole business model: is buy up these small businesses, optimize them, make them better, and then essentially be valued for more. And you're probably wondering, like, what's this got to do with content sites? Like, these are just Amazon FBA businesses. But does the same opportunity exist within the content publishing space? And I think this is my idea, I think, of where the space is going at a bigger level over the next couple of years, because the same opportunity does exist within the content publishing space. And there's a massive enter Future PLC. There's a massive company that's already doing this. They've kind of lined the way, paved the way for other smaller businesses or other aggregators to do this. And most of you are probably aware of lots and lots of the brands that Future PLC own and operate, but you probably weren't aware that they were all owned by one brand. So Tom's Guide, Marie Claire, Guitar World, PC Gamer, Country Life. Like, at one point in time, you've probably been on one of their websites and not realized that you've been on one of Future PLC's websites. You probably just thought it might be independently owned, or you may have not even given any thought to who owned these brands. But basically, it's one company that controls a ton of these major brands on the internet. And their whole ethos basically is to do the same thing as what the FBA aggregators do. But it didn't start out like that. Future PLC has been around for a long time. Started in 1985, and basically they published computer magazines, and they went on to print like actual in-person physical magazines, including Guitar World and Revolver. But by 2014, they'd sold pretty much all of their print business to focus online. And since then, they've gone on to raise capital and gone on this acquisition spree, exactly the same as those FBA aggregators, but going for content publishing sites. So in 2018, they purchased Perch, which was a B2C publisher, 132 million, and that included the brand PC Gamer. And then in 2019, they purchased someone else, Mobile Nations, for 115 million, and that included Android Central and Windows Central. And then in 2020, purchased another brand, TI Media, 140 million, and that included Country Life and Home and Woman and Home. And over the years, their portfolio has become really diverse. They now own websites in life and lifestyle, so like Country Life and Woman and Home. They own things in tech. They own things in the music space. They've gone on to become this almost like can't say that word, conglomerate. Is that the word? Of publishers. Yes, they own a bit of everything on the web, online now, and they've had to do that to scale. They've had to go into all these other areas to scale. And here I've just pulled up some Ahrefs charts of some of the sites that they've purchased, and you can see they've clearly got a strategy in place that when they buy a website, they implement their own SOPs, they've got their own team, they utilize economies of scale, exactly the same thing as those FBA aggregators do, to grow the websites and bring them under their own brand and grow them over time. So this is Tom's Guide. It's seen massive growth over time. And this is Mary Claire, and it's, again, seen massive growth over time as well. And PC Gamer, just 3 examples of sites that have seen massive growth over time since they've been under the ownership and the stewardship of Future PLC. Pardon me. And when we look at the business model, like I took this word in directly from their website. I'll read it out. It says, we diversify our monetization models to create significant revenue streams. We focus on 3 material revenue types: advertising, consumer direct, and e-commerce affiliates. We leverage our data and analytics to predict our audience's needs. This drives innovation and execution of our strategy. When you really dive into that, all they're basically saying is they're a massive content publishing business. They abide by the same principles that we do as niche website owners. We are affiliates. We rely on display advertisements. We use data and analytics to try and uncover new keywords and new opportunities and understand where our traffic is coming from and how we can do better with it. They're just doing it at a massive scale. Like, in theory, there's nothing different between what they do and what we do as niche website owners, except they're just doing it on a massive scale. They're buying up these brands and they have a formula in place to grow them. And then we look at the financials, and this is a real eye-opener. In 2021, they saw revenues of 606 million, and their operating profit was 195 million. And this is pounds, so this is not even dollars. And that was up 23% year on year. And the current company, so it's a publicly traded company, so you can see all this information online. The current company valuation is 2.17 billion pounds, which is incredible. But the other thing I find incredible here is the valuation. Like, we just literally looked at what the state of the industry was, and we saw these types of sites are going for 30, 35, 40x multiple. Because this company is publicly traded, their valuation is, if we did the same calculation, trading at 133 times their monthly revenue. Like, can you see the opportunity there? Can you see how they're able to come in and hoover up these big brands, these content publishing sites? And sure, they're not going to buy some of these websites for the 30, 40, 50x multiple, but they could easily go 100x multiple on these sites, bring them into their portfolio, and instantly make a ton of money, even without adding their SOP, even without bringing them in and utilizing their economies of scale. And this is why I think this business model is so fascinating. If you can get to the position where you are in this, if you can get to this position essentially, and it is obviously a ton of time and work and manpower and team power gone into this, but it's almost a license to print money. It's almost a license to buy up these kinds of publishing businesses for a way lower valuation, fold them into your current portfolio, and see a higher return. And on a smaller scale, I always remember I spoke to a lady a couple of years back who was doing something. I mean, the theory behind it was the same, but Amazon used to, or they still do, they have custom rate cards. Amazon Associates, the Amazon affiliate program, and if you used to do a lot of volume on Amazon, they give you a custom rate card, which basically meant you get a better deal than most other affiliates. And this lady had a custom rate card, and she would go out and she would buy up Amazon affiliate websites, knowing that as soon as she bought them, she puts them into her Amazon account, she gets paid a higher percentage than the person she bought it off. So instantly she's realized value. And this is basically the same thing, just on a much, much bigger scale. And the opportunity there is massive. But that's all great. Like, all right, this company's worth 2 billion. Like, that's out of the realm of possibility or even kind of contemplating for most of us. Like, what about us little people? And I see 2 opportunities for us little people in this growing space. And the first one is, like, we always talk about building for the long term and building a quality website. I think the goal really should be to try and build a website into such an attractive asset that you become acquired by one of these aggregators. Like, you want to be in the sights of a future PLC in the future. You know that they can afford a much higher multiple than the 40x that you might typically sell it for. So the one way that we can take advantage of this opportunity is to create an asset so desirable that these kind of aggregators, and by the way, I think Future PLC is just the start. I think the way that we saw that capital ramp up to 8 billion for Amazon FBA businesses over like a 1.5 year period, I think that's coming in the content business. So I think Future PLC has just paved the way, and this is just going to explode in the next couple of years. So one of the ways we can do that is to make ourselves attractive to those kind of buyers. They're looking at us with, they're looking at sites which have strategic fit. And when that happens, like valuations and multiples kind of go out the window, especially when you can see the business model and they can afford to pay a much higher multiple than you would typically get. Or the other opportunity I see is to actually become one of these aggregators. And I don't mean, go out and raise 3.4 billion like that last one. Again, that's out of the realm of possibility for most of us again. But I certainly think that you can become one of these aggregators. And I've got an example of one that's based here in the UK. So it's a company called By Gamers for Gamers. They were founded in 2019. And they started out with one brand. So they started out with WePC, and it's a content-based website about PCs, obviously. And over the course of the last couple of years, they've gone on to acquire and build out that asset. So they built out WePC to a massive asset. They've gone on to acquire PC Guide and Tablet PC and Headphones Lab and Which Laptop. And they're basically doing the same thing that, or they're attempting to do the same thing that Future PLC have done, but in a very narrow space. They're concentrating on the gaming space. And you can see that their kind of ethos is a team of experienced, passionate individuals dedicated to bringing our readers the best in PC tech, gaming, and esports. And to do that, they have to acquire these brands, and they have to basically become the go-to people in the space for PC gaming and PC tech and anything to do with PC hardware and that kind of stuff. And they've done this. I know that they've raised some capital, but they've bootstrapped a lot of this from the revenue that they've made, I think, from WePC. So I think a lot of it's been bootstrapped. I know they've raised capital recently to expand the team and carry on going that way, but a lot of it was bootstrapped from the start. And I think we should try to think about our portfolios in this way. How can we leverage one website? How can we bootstrap it to the point where it allows us to acquire other brands in the space? And then once we've got another brand, how do we acquire another brand and go from there? And the aim, I think, should be to stop thinking about these websites as like a single asset. Like, stop thinking about your site as this is just my one website and I'm going to grow it and I'm going to sell it. Start thinking about it as a real business, and how can you go then and acquire these other brands, or how can you build these other assets? And basically, how can you build a moat around your business, which then says you are not just the authority website, but you're the authority in the space. You literally own the space. And that's what BGFG have done. And I know recently that they've gone a step further now. So now that they've got this kind of authority in the space, they've gone on and they've not just done, they don't just rely on traffic from their websites. They've built a very large social media following. I know they've got to over like 1 million followers on TikTok very quickly, and they've got YouTube channels and all kinds of things. And they've just launched an agency now, which specializes in helping PC manufacturers and manufacturers that sell gaming tech hardware. Like, they'll run full end-to-end campaigns for them. They'll pick the best brands that they think will match the right audience. They'll pick the best social channels. And in doing so, like, they might get, I don't know, $30, $40, $50 RPM typically from a display ad network, or they might get $80 RPM from selling, Amazon affiliate products. But in doing so, and in creating this agency and creating this moat of value and tailoring the ad campaigns and going across social media and email campaigns and SEO traffic on the websites, they're able to charge a much, much higher premium. Like, the campaigns they put together, the RPM is just way, way higher than you'd ever be able to get from display ads or through just being an affiliate for normal products. So again, I think that's an opportunity. If you're able to do that, and if you're able to create an environment where manufacturers or people in the space will want to come to you and utilize your audience in different ways, you can almost name your price, as long as that targeting works, or as long as your strategy for getting the right campaign in front of the right audience across your network of traffic is correct. And I think they've done that really well. So this is just an example of someone smaller that's not raised billions, but are doing the same kind of thing. And I think this just shows that it's achievable for us, as well as being smaller publishers. And the last thing I want to talk about now is kind of just mainstream investment, how anyone can get involved. And this is more about how you can get involved if you want to be involved like hands-on, or if you want to be involved hands-off. So digital asset as an investment class, I think, is becoming more legitimized, like as just a pure asset class. More and more people know about the space. More and more people are entering the space. There's money flowing into the space all the time. And just on Empire Flippers alone, the sale of Amazon Associates, display ad and affiliate sites are up 209%. and that's like $9.3 million higher. And that's just one marketplace. There's tons of other marketplaces out there. If they're up $9 million, like the space in its own right is exploding in terms of new money coming in and people looking to get into the space and invest in digital assets as an actual asset class. And also funding for digital assets is becoming easier. Like it's still a little bit behind here in the UK. You can't really get funding here in the UK for digital assets, so it's harder. But in the US, you can use an SBA loan these days to fund a purchase. And there's a lot more options available to people in the US. But the fact that lenders are opening up different options for people to buy digital assets as an asset class just goes to show that it's becoming a legitimate and actually like these big time kind of lenders and these big institutions are realizing that this is an asset class you can invest in. It's comparable to the stock market or other types of investments. And then the other big thing for me is that companies such as Future PLC are traded on the FTSE 250 market, which in the UK here, it basically means they're one of the biggest companies in the UK. They're one of the 250 biggest companies in the UK, which is massive. I think that just goes to show that if a company can go and hoover up and buy up and run a content publishing business and become one of the biggest companies here in the UK, like there's nothing more legitimate than that. It's a real business with a real headquarters and it's a publicly traded company. And I think there's two ways you can get exposure today. Like literally, if you were thinking about getting started today, there's two ways to get exposure to this growing marketplace. And the first way to get exposure is basically at arm's length, which means you don't get your hands dirty. You're not involved in the day-to-day building or running of websites. And that's fine. Like that suits some people, but we can see here that typically the returns are a lot lower, as you would expect. You just swapping your time or your money for some kind of return. And there's a couple of different options for this. So OnFolio, they are a fund in essence that will take your money and will go and buy websites and run them and then return a percentage back to you. And they currently have their preferred option or preferred share program that's currently open, pays you 12% annually. That's not guaranteed either, mind. So, it's basically a 12% dividend on a share that you get because they think that they can go and buy assets and make more than 12%, which so far they've done. And then you've got Empire Flipper's capital program. This is only open for accredited investors. And basically this is where Empire Flippers find proven website operators. They'll raise a load of capital and then they'll give that to the website operator to go and buy a website and improve it and grow the website and then return some of that cash flow back to the investors. And typically they say that their projected annual returns are around 20%. But again, that's not guaranteed. And we all know that there's some ups and downs with how that could work. And then the other way, which I think you could get exposure at arm's length, is literally just to buy like the stock of Future PLC or some of these other kind of aggregator type content publishing businesses and just hold them for the dividend or wait for the stock price to increase and go that way. So it's more of your traditional kind of investment. The second option basically is to build or buy a digital asset yourself and become an operator. And you can do this in one of two ways. One is to basically learn and implement what you've learned and take a course. Authority Hackers got an amazing course. Project 24, we've had Ricky on in our event. His Project 24 course is amazing. You have to go through those and you have to get your hands dirty and you have to learn the ins and outs of basically start to finish of building a website or buying a website and improving a website and then apply those principles. And in all honesty, like people talk about this space as you can make a lot of money quickly, but realistically, it is a very steep learning curve. There's a ton of things to learn if you wanted to start from the beginning and learn everything and be successful. And the reality is you're going to make mistakes along the way and you learn from those mistakes. But if you're starting out, there's a ton to learn and you make mistakes. Or the other option is to outsource it to a company, and I'm going to plug us, such as Niche Website Builders, and leverage expertise. This is for people who don't want to get their hands dirty, who maybe don't want to learn, don't want to take the time, basically want to rely on someone else's years of experience and expertise to help them with certain topics. And those
for people who want to scale up, right? I guess so. Once you get to a certain point, like there's only so much one man can do. So after that, it's we can help with like scaling up and when people got more than one site and stuff.
For sure. And what does success look like? So if you wanted to do this on your own, like these are the things I think. I mean, success of a website in my eyes comes down to two things. One is good quality content, going after the right kind of keywords, and good quality link building. So like these, and this is the foundation. This is the bedrock that you would have to learn if you wanted to do this yourself and get your hands dirty. So first thing you'd have to do is pick a niche, like niche selection. You have to figure out where do you start, like, and what's a good niche, what's a bad niche. And we just did the topic before this, the live panel. We talked a little bit about niche selection on there with some of the experts, and there was some great tips there. So go back and have a little look at that video from the panel from the end of the day today. And then once you've got your niche, like you've got to do your keyword research. Like, where is the opportunity within that space? Like, okay, it's great that you've picked a niche, but is there low hanging fruit? You know, is there enough people searching in that space? Is it a viable area to build a website in? Does it have long-term potential? Does it pay well? Are there good affiliate programs if that's the route you want to go down? And then once you figured that out, you've then got to start looking at content writing and what makes a good piece of content. How do you write a content brief? How do you structure a piece of content? How do you make sure that the content that you write matches Google's search intent? How do you make sure that you're not falling foul of any Google's rules and you're not going to get hit in some kind of update in the future? And then once you've got that, the last step basically is, once you've created that content, is obviously uploading and formatting and adding images. And that's more of a technical skill of WordPress. But really, like, you've got to learn 3 key skills there. You've got to learn how to pick a niche, how to do your keyword research, and then how to create a good piece of content. And then on to the link building side of things, because this is the other pillar, I think. We've got 3 different methods of link building. So you've got to learn a method of link building. And we do Shotgun Skyscraper, which is where you create a piece of content and you do outreach. And we've got guest posts and niche edits. And we've got Haro, which is our newest one, which gives really great results, but it's really hard. Like, you have to pitch to hundreds of journalists to get links placed and acquired. So all of those require a skill set, and you have to spend time learning. And then once you've learned that, you've got to understand, like, what makes a good and bad link. It's great doing Shotgun Skyscraper or Haro, but how do you know if you've got a good link or a bad link? So you've got to learn that. And then to go along with that as well, you've got a ton of infrastructure set up. Like, all of these methods typically will require some software or tools or at least processes that you've got to have written down, SOPs, and to scale, then you've got to build a team, etc. So you can do that, or I'm going to end with a shameless plug and basically say you can either learn all those things yourself, or you can book a call with the team to understand which service would fit you best. And I mean, this whole event was sponsored by Niche Website Builders. We put it on, and I think this is probably the only time we've really advertised our services. So I'm going to end on that, and I'll leave that kind of slide there. But yeah, what do you think, Mark? Because I know you weren't overly familiar with, like, aggregators and how they worked and things like that. So what's your thoughts on this whole thing?
Yeah, I second Jacob. Super interesting. I mean, we have spoken about this for a while. We know about, like, where it's going. I think it's only a matter, like, more and more people are realizing this is a good, a good place to put your money. Right? It's a good investment strategy. It's it's an intelligent place to put your money at the moment. Like, it's offering really good return on investment. Like, why wouldn't people want to do it? And then why wouldn't people want to hoover them up and then make a big company where they can sell for bigger multiples? It just kind of makes sense, right? So it's only a matter of time, I think, before we see more and more of this. And it goes back to what we was always saying, right? When you create a site, it shouldn't be for the short term. It should be about, like, how do I create something that's going to be an asset to me, like, long term? And if you're thinking in that way, then there's no reason why you couldn't be picked up. I mean, it's a liquid market anyway, right? You can sell sites pretty easy anyway. If it's a good asset, people want it. For the same reason, like, it's a good investment. So it's really easy to sell anyway. So whether an aggregator picks you up or someone else, it's not going to be a problem selling it. Maybe you can eke a bit more money out of an aggregator. Yep, nice. Yeah,
good. Actually, so going back a little while back, I tried to sell a site to an aggregator. I didn't even realize they were, and I emailed them, and then I got an interesting insight into them. So they replied to my email, but they meant to reply internally. And the email basically just said, site is nowhere near big enough for us to even consider, like in so many words. And I got that reply back and I was like, oh, yeah, well, clearly like nowhere near the size of a site that an aggregator would be interested in. But yeah, like the fact that they actually looked at the email and they had some kind of internal conversation means that there's stuff going on there in the back end.
Yeah, for sure.
Yeah.
It is quite a big goal, yeah. I think so. I agree. But that's long term, right? So then they'd be playing a long term game, you know. Yeah, why not? Why not shoot for the sky? You might fall short, but you know, if you've shot for the sky, you're probably going to get quite far along anyway. Aim big, think big. Are these slides available for download? We haven't got any plans to offer them for download at the moment, Daniel, but we are leaving the login available for people to log in and go and watch the sessions again. I've noticed just now on the site, the agenda menu item has gone because like the agenda's over. So I assume we can probably put that back. I mean, if you go into your section and go in my agenda, you can go and see all of the talks that you registered for. However, I'm sure we can kind of find a way to kind of get those back. In some way, we're going to like make them available anyway. So you'll be able to go and rewatch the videos and take notes and consume whatever you need to over time. So.
And Rich Estimate basically says like he had no idea when he goes to Tom's guide, he's expecting you to directly from Tom, and no idea that the site was under like there's other sites under the brand. Right? I think most people are like that. I didn't even when I was looking at there, like Go Compare in the UK is a massive like comparison website for insurance. I didn't have a clue they were owned by this company. I've used them in the past, and I didn't even realize that was a thing.
Yeah, no, not at all. Go on. Last but not least, go through the presentations. There's some really there's some gold in some of those presentations for sure. So go and definitely go back and watch them. Take the time and just absorb it all. And as I say, there's stuff that I definitely picked up from some of the sessions over the event as well. And I think I should be doing that as well. So so it's good. I'm glad you enjoyed the event of the people that have joined. Oh, hang on. One more last one. What's it? Jacob saying Dash Meredith, Investopedia, the band Spruce. Oh yeah. Okay. Yeah, I mean the Spruce is pretty big on its own, isn't it? My Investopedia.
Yeah.
Ooh. Okay. Well, anything else to add before we kind of wrap it all up, Adam?
No, I'm looking forward to some sleep now, to be honest. Been a long couple of days, isn't it?
For sure, yeah. It's like 10 o'clock in the UK now. So we've been doing panels and stuff the last three evenings. So looking forward to some time off. But really enjoyed it. More than I thought I would. So thanks everyone for joining. Thanks for all the speakers for contributing and making it a really interesting event, and for everyone for asking questions. Our door is open. Hit us up on nichewebsite.builders. There's a chat there. There's a contact form. You can get in touch, and we'll be glad to kind of help with any questions that you've got.
Yep, awesome.
Other than that, well, thank you very much again, everyone, and we'll catch you soon. We'll be doing 3 live streams again next week, as we always do every week, and a podcast as well. So there's like 4 live streams. So sign up to our YouTube channel, Niche Website Builders, and we just keep this content coming every week anyway. All right. Yes. Thanks very much. Bye.
Bye, guys.